What's going on, everybody? Welcome back to the channel. We got a lot going on today. This video isn't going to be too long. I do want to talk about my trade today on GDX. We traded the basically the gold ETF. We traded that. We played the long side today. TD Ameritrade was a little bit glitchy, so I actually ended up getting into more contracts than I intended to. But I'll tell you guys all about that in a few minutes. I've got the charts pulled up. We're going to talk about the markets and how they're reacting to the latest bizarro world events that are unfolding. You all know exactly what I'm talking about. I don't really want to get into that. You guys can go to other channels or the mainstream media to get the latest updates about the fiasco in DC. But the one thing I will say about all of that is there's people that are acting surprised, right? They're maybe pretending that they're shocked. I'm going to be honest. I'm not shocked. I'm not surprised. This is exactly how I pictured 2021 getting off to a start. We knew 2020 was bad, and we know 2021 is going to be in some ways even worse. So I'm not shocked. I'm not surprised. I'm not baffled. This is exactly how I expected things to play out. And, you know, what do you expect when you have tens of millions of people in America who have lost all faith in the political system? What do you expect? So that's all I'm going to say about that. But the markets are reacting to this. You have bank stocks that are soaring right now. Oil surges on the news that the Democrats win in Georgia. There's going to be a lot of Democratic control, Democratic power. There's the alternative narrative, right? The narrative from a lot of Americans is that, you know, the socialists are taking over, that America's never going to be the same, that this is a fight for our country, and, you know, we can't let this happen. But when you go to look at a lot of these Democrats, they're not as, you know, lefty as we're led to believe, right? They're not as far out on the left as they even try to promote themselves to their constituents and their voters. The reason I think a lot of these bank stocks and even the oil sector right now is surging is because even Biden himself, but this Democrat Party that is now taking control, you know, are there fringe elements in it? Of course. But the alternative narrative I'm going to present for you guys, and make of it what you will, go and do your own research. But is it possible that some of these Democrats are actually very pro-business, but they sort of, to get elected, have to appeal to that fringe left demographic within the Democrat Party? That's a narrative that is out there. Like I said, I'll let you make of it what you will. But I do think it's possible that this is why the markets are so excited. You know, when you have the Dow Jones at all-time highs after Democrats win in Georgia and just everything going on in DC right now, you know, it's telling us something, okay? The elite, the bankers, the oil financiers, these people are not that nervous about, you know, what's to come with the incoming administration, the incoming Biden administration, right? We're supposed to just shut up and you know, accept this you know, coup d'etat. But the point is that the markets are very excited about this. Now, the dollar is still very weak. I want to talk about not necessarily the dollar, but the commodities index, right? The CRB index. I talked about this a couple of days ago. This is an index that was started in 1957. It's an index. It has about 50 different commodities in it, right? You've got oil, Brent, you got natural gas, gold, silver, copper, soybeans, a lot of agriculture in there. We talked about wheat hitting a 6-year high just a few days ago. But the dollar is being devalued, right? We know one thing is for certain, right? Whether or not the incoming administration is certain, whether or not, you know, some political outcome is certain. What we do know is certain is that there will be massive amounts of money printing, and this is going to devalue the dollar. Is it realistic to think that the dollar is going to collapse this year? I'm not so sure about that. But what I do see, right, what the chart is telling me is that commodities are going up. We are in a bull market for commodities. The reason this is so important, especially as a silver stacker, a gold investor, if you are interested in these precious metals, whether that's holding them, yourself where you have physical access to them, or, trading the options, trading the paper. I wouldn't invest in the paper, but trading the paper, right? If you can figure out how to do it, go for it. The reason it's so important that commodities are going up is because that is going to, if the CRB continues to rise and commodities in general the prices continue to inflate, that's going to support the gold and silver prices, right? Because if commodities in general are going up, it's going to support the precious metals, right? It just makes sense. In silver, it's down a little bit right now. I think it's down about 1.2%, but we're still over $27 an ounce, right? I remember just a couple of months ago, I was buying silver at like $22 an ounce. I think I got in at $21 a time or two as well. But, a year ago, it was under $20. So this is a good thing. Now, I personally would prefer buying silver. If I'm going to stack it, I would prefer stacking it for a lower price. But will we ever see, $22 an ounce for silver anymore? I don't know. Gold we've got at about 1900. We'll call it 1900, 1920. So this is very, very good. But as the dollar continues to devalue, these commodities are going to go up. Let's just go over a few headlines right here. The Dow notches fresh record high, right? With everything else going on, right? It's just, this is how the markets are reacting. They're not that worried about a Biden administration. What else? We've got Bitcoin hitting all-time highs again. Stocks in Brazil hitting all-time highs. So stocks in general, right? In South Africa, Italy, stocks are, the global markets seem optimistic. Why is that? It could have something to do with an incoming Biden administration, because the way the central banks work and the way that the U.S. Treasury works, they really do have a huge influence on other central banks and treasuries, government treasuries throughout the world. Or I should say treasury departments, right? Because I'm not talking about the bonds. The money printing, though, if America does it and the central bank, the Fed here in America starts, the quantitative easing again and prints more stimulus checks, all this kind of thing, other central banks around the world in lockstep. I mean, we know about Operation Lockstep, or what was the document written by the Rockefellers? I think it was just called Lockstep. I won't get into all that right now. But the point is that they will follow suit, right? The rest of the world will follow suit. So I think this is why markets are excited. Just to go over a couple more commodities here, you've got crude oil, Brent, and natural gas, gasoline, heating oil. All of this stuff is up today. The XLE and ExxonMobil, all of these charts are up, which is interesting because I think a lot of people were anticipating, maybe even myself, were anticipating that oil would be weak on an incoming Biden administration. But maybe these Democrats are more pro-business than we're actually led to believe. So that's why I'm going to try to remain optimistic as well. I don't necessarily like everything that's going on, politically or with the political situation in America right now. But it is what it is, right? We can't get angry about it. We can't, fight with our friends and our family and random people online who disagree with us, right? The best thing that we can do is get our money right, be involved in the markets to the extent that we're financially able to. I'm stacking silver, stacking gold, trading it. With that said, let's go ahead and get in my trade because this video, how long is this video now? I think I'm going to cut this under 15 minutes. We'll be able to do it. So here's the charts. You got the SPY, the QQQ. You know, this is my macro watch list, right? I've got the dollar index over here, the DXY. I think it's hovering right up there behind my head. You know, this is what I look at usually first thing in the morning. Every time I come to my computer, this is the first thing I look at. You also have the VIX is up a little bit, right? We're in that like 25 to 26 range. The VIX is the volatility index. Gold did pull back the last, couple of days, couple of hours. Same thing with silver, but they're still up. Now, this is a gold stock, Blue Lagoon, right? It's only, right now it's at 49 cents. I bought 100 shares at about 51 cents. Plus, it's an over-the-counter gold stock. So these are shares, 100 shares that I'm going to be holding on to for the foreseeable future. And so at least the duration of this gold bull market. And I do believe this stock is going to do well. I've seen the CEO from Blue Lagoon has been interviewed on many different YouTube channels, even some silver stacking, channels that I watch. And I'm very excited about this particular investment. It's a small investment, but because it's over the counter, I have to pay, $7. So commission on TD Ameritrade. So I'm a little bit down on this particular stock, but this is something I'm definitely watching. Right now, it's about 49 cents. But from what I understand, this stock is going to definitely show some returns in the future. At least that's what I believe. That's why I bought 100 shares of it. So that is what I bought today. I think I also bought another share of what's SILJ, which is it's basically the junior silver mining ETF. I'm all about commodities, man. These high-priced tech stocks, they're cool. Don't get me wrong. Trading options on Apple and Tesla, right? It's definitely cool. If you're making money doing it, God bless you. But I just feel something calling me towards commodities. And then this is why I'm buying mining stocks, why I'm buying mining ETFs. So the trade, right? The trade, again, was on GDX. You can actually, let's see, you can see my trade history right here. So I ended up buying 4 calls this morning. All right, I got in at $37, $41, $39, and then $31. That really got my average cost down. I didn't mean to buy this many contracts. All right, I was only trying to buy one, but TD Ameritrade was really glitchy this morning, and I thought I had canceled a couple of the first few bids. Like when I tried to get in, and the price just didn't reach or something, and I canceled. I thought I had canceled. Well, I guess I didn't. About a few minutes later, I hear ding, ding, and I was in those 2 other contracts. But looking at the GDX chart, let's look at a 1-minute chart, because I was actually trading on the 1 minute. So as you can see, we had a pre-market supply area, right? This is the pre-market right here. But we also had a demand area from the 1-hour chart, and the higher the time frame, right? Like a 4-hour demand zone is more valid than a 1-minute demand zone. A daily demand zone is more valid than a 1-hour demand zone. Same thing with the supply zones as well. So we had this 1-hour demand zone, and we immediately fell into it, right? Right at the open, we fell into this demand, and like clockwork, the stock went up. Now, I did sell a little bit too soon. I actually got in right here in demand because we had the reason was because I had this confirmation, right? We had the green volume coming in. The red volume was kind of dying off. We were in a demand area, and then volume kicked in. So I said, what the heck? I may as well, take a chance with this trade. And I did. Didn't mean to buy 4 different contracts. Was just trying to buy 1 contract, or maybe 2 at the most. But anyways, I was in for 4, and I sold right up here. We broke right through VWAP, and I was just trying to get in and out, right? That's my style. That's where I feel most comfortable. I have never had good luck holding any longer than a few seconds or a few minutes, right? These trades are ideally, they're supposed to be moments long. and that's just what I like to do. I like to scalp, right? I'm kind of an impatient person. I'm kind of, I just have that like immediate, what's the saying? Immediate gratification, right? It may be a weakness of mine, but this is my style when I am trading. So I don't like to hold on to it. Had I held on to this, okay, yes, it would have pulled back a little bit. I could have added to my position, and I could have sold for a few more points to the upside. But you can see GDX did rally into supply. I didn't play any of the other, moves here, but this was the move, right? This is what I like doing best. I like getting in, getting out first thing in the morning if I can. If I don't see an opportunity by 10, 30, 11, I'm out for the day. I'm going to really try to practice sitting on my hands. But this is my trade. I'm up 3%. It was actually over 3%. It was like 3.22% on the day, which is great. It's a bigger percentage than yesterday, and it's a bigger percentage than Monday. So 3 trading days in a row, my percentage gains are climbing. I'm very excited to be back into trading. And by the way, I was trading the GDX calls in case I didn't articulate that. I think it was actually the $25 call, right? I think. Yeah, it was the $25 call. Now, had I held this, right, it's worth about $57, or it was at the close. So, I could have held through this pullback, even into down here, and the trade still would have worked out in my favor. I also could have waited until we, kind of popped in demand again, and I could have, sat around and held all this, but this is all in hindsight, right? I'm just showing you what's possible. What I do in reality is, I get in at the bottom of one of these moves, and as soon as it pops, I'm out, right? I just want to take my profit. I'm just trying to grow my account a little bit day by day, and I'm having fun with it, right? I'm not trying to do this for income. I'm just trying to build this account, and that's the best way to trade. Don't try to trade for income. Just trade to try to build the account. You want the account to be as big as you possibly, can get it. And also remember that cash is a position. Even though we're not big fans of cash over here, and cash, does devalue over time, cash is still a position. So let me know if you have any questions. Let me know what are you looking at? What's on your watch list? Where are you putting your money? Comment down below. Give the video a big fat like. Smash that like button. And follow me on social media. The links are in the description down below. Big shout out to everybody supporting and following me on Patreon. And with that, I hope you guys have a fantastic rest of your day. As always, God bless.